Hi, welcome to Russell Investments Market Week in Review for the week ending 14th of November 2025. My name is Alex Cousley. I'm a senior portfolio manager based out of Sydney. And there's a couple of things to get through this week. So to begin with, in the US, it was a pretty light week on the data front, but we did have the indication that the government shutdown will be ending. That we opened up the week in equities a little bit higher on optimism around the government shutdown ending. Then on Thursday, we saw a bit of a sell-off in equities, particularly the small cap equities and the NASDAQ, on concerns around whether the December rate cut from the Fed is still likely. From our view at Russell, we still think that the macro environment is still quite healthy in the US. There is still this tension between the labor market, where we're in a low hire, low fire environment, and the activity data, where we have really strong capital expenditure and pretty healthy consumer spending. And we think that that resolves in 2026 to a more positive environment. The labor market might catch back up to the activity data. Outside of the US, though, was quite a bit of data coming through. And let's start with China, where we got the inflation data and the credit data. On the inflation data, we saw actually a bit of an upside surprise in consumer prices, but really nothing to write home about. The Chinese economy is still in a pretty low inflation environment. We expect that will to continue for some time. Then the credit data, which is one of the better indicators that we think is worth watching in China, where we saw generally pretty soft environments. So bank loans to corporates and households was still quite weak. And we have this government bond issuance that's supporting a bit of that. So the macro environment in China is still quite soft. Those structural challenges around the property market and the consumer being quite cautious. That's still a dynamic that's going to play out and probably will play out through 2026. And then finally, in Australia, we had the jobs report, where we saw stronger than expected jobs number off the back of a couple of weaker numbers. And that really reaffirmed the market's questioning around the next RBA rate cut. If you go back 3 months, the market was quite convinced that we would have had one more rate cut by now, and that hasn't occurred. And where we sit today, we think that we're probably looking at a Q1 or Q2 rate cut from the RBA as the economy continues to run a little bit below trend. There are risks around that, around inflation, but we think that inflation trend will moderate. And then from the bond perspective and fixed income perspective, Australian bonds still offer really attractive valuations, whether that's on an absolute basis or whether it's relative to other areas like the United States, where the spread that you get above a US government bond is still quite attractive. So pretty busy week, but thank you for listening, and we really appreciate your support. We'll speak to you soon.
Hi, I'm Sophie Antal-Gibert, Head of Portfolio and Business Consulting at Russell Investments. If you liked what you just saw and heard, consider subscribing to our YouTube channel or check us out on LinkedIn. Thanks for tuning in.